Good morning, traders and investors from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. This is going to be a pre-recorded YouTube video to mean you could access it on our YouTube channel at HFM Kenya. Kindly like, subscribe, and click on the notification button so that you are not left out in future content that we post from time to time. On top of that, like and share so that we get to bridge the educational gap together. And as our commitment will be to ensure to put out knowledgeable videos and content which is going to help us shorten our learning curve and help us get to possible profits in a relative amount period of time. Now, we begin with our usual standard procedure of going through fundamental analysis that we have defined before as economic and geopolitical forces moving the markets. And then from there, we're going to go to look at technical analysis for us to have a grid of what price would print in time. So, beginning with fundamental analysis, I would shoot straight to the highlights of the forces moving the markets right now, and then we go to distinctive examples for us to proceed therein. So, number one, on fundamental analysis, we had positive CPE numbers come out on Friday. Let's make sure from the United States. This is the hfm.com website. You could find the economic calendar here. Also, nice. We had core CPE, which is personal consumption expenditure, coming out at 0.2, which the actual 0.2, and the anticipated at 0.2, and the previous at 0.1. So we see an print of higher than the previous, which strengthened the dollar. That's number one. We're going to be seeing a stronger dollar. In geopolitical news, we were preview to, good morning Sam, good morning Hannah, we are preview to the famous double T, which is Trump's tariff. During the end of last week, we had quite a number of dynamics in context of Trump's tariff. The number one, we had Trump reminding the northern and southern neighbor, that is Mexico and Canada subsequently, that he will begin imposing tariffs, and tariffs are taxes on certain imports and exports, in this instance imports from Mexico and China, the following day, which was the 1st of February. That is this just concluded Saturday. So this one had a perceived reaction on the dollar, strengthening it to a certain degree. On top of that, we also had an instant tariff on China. That's a 10% in tariff on imports from China. This, we're going to see the effects of this on the financial markets across various asset classes. On the flip side, we also had retaliations from these countries. With our lens on Canada, we saw Canada trying to put out a counter statement to the Trump's 25% tariff on her exports to United States. We'll see how that went thereabout. And finally, on commodities, we'll see these trade wars effects on the financial markets. Of course, they're going to cause tension. So we'll see commodities behaving in a certain way, distinctively, with our lens on gold and oil and what to expect in the future. So let me share my chart. So beginning with gold from the daily time frame, we see that gold surpassed the 2720 higher high, and actually touched the 2800 price This is due to the tension which is caused by the trade wars between US and her peers. In the recent past, we haven't had quite direct altercation on trade warfare between the US and Canada. They have been quite friends. And now we see an entry into a new phase where we see back and forth between these two countries. This is causing tension in the world. And remember, the tension is not only caused because of the tariff imposed on Canada and Mexico and China, but also Trump has threatened to impose tariffs on Euro products. Okay, if certain conditions are not met. We remember the previous week also we had earlier in the week Trump imposing a 50% tariff on Colombia. So we see the US being on the front side to impose taxes, high taxes for that matter, for imports from certain significant friends of the United States. This is causing tension, this is causing fear, and this is what we are referring to as trade wars. Okay? So, in an aim to outcompete each other, the new president of the United States, he's consistent on imposing high taxes on imports from strategic partners of the US, causing fear in the markets, which cause this precious metal to trade to the upside. As long as this would continue, we would see a much more bullish market moving forward into the week. However, as we anticipate economic data and geopolitical events coming in, we would also see a reverse of this. We'll keep you updated using our various channels. On oil, oil reacted from the 72.73 dollars per barrel, and now we see price spring to the upside. However, we know that the pressure being mounted on oil producing countries, or the OPEC if you like to call them, to reduce the prices of oil, so that one of the oil producing countries causing war in the middle in Eastern Europe, this is Russia, to lack resources to proceed with the war. Now, these efforts of reducing the prices of oil would make the prices of oil to keep being bearish. Would want to see it printing below the 71.54 area of interest and printing further, as long as these pressures are mounted by the United States in attempt to lessen the escalation of war between Russia and Ukraine. On currencies, on Euro USD, this is GPY, on Euro USD, we see that we opened with a gap, very huge gap today down here. Price was printing on the upside because of the positive news which came out in the previous weeks. That is called PCE in euro, which weakened the dollar slightly. So we saw this long-term trend trying to change from a bearish trend to an uptrend, but now we see printing to the downside again because of the perceived dollar strength due to the tariffs imposed by the new president of the United States, opening up with a gap. Now, in chartered market technician, it is a principle that this gap is going to be filled 48% of the time, so we'll be watching out for that. But we know the overall trend is bearish. So for scalpers and day traders, they will take advantage of filling of this gap to get in for short-term buys, but for swing traders and position traders, they would maintain the long-term bearish trend. This is a scenario that we are likely also to see on all US dollar quote currencies, the US dollar coming in second, like AUD USD as it's right now, opening up with a gap. Also on GU, we are likely to see the same. Also on NZD USD, like it is printed right here, we see this gap opening to the downside. For US dollar based currencies, or the US dollar coming in fast, like USD JPY, remember it was requested last time, would see this price printing to the upside. But wait on for a moment. It is important to note that the Japanese yen is seeming to react slowly to the tariffs. It's not as fast opening with gaps like we have seen in the US dollar, in other US dollar major pairs. Okay, this is reacting slowly, but overall we want to see price printing on the upside. And if I would go to one that would give us a clear indication like USD CHF, we see it opened with a gap to the upside. Want to see these highs being taken out at 0.91990 to confirm the bullish bias. In context, it is important to go to a lower time frame and wait for occasional consolidations, no, sorry, occasional retracement to the downside for you to proceed with the buys in context. Right here, would want for a slight consolidation to the downside for us to keep getting in for the buys, but the bias would be confirmed to be bullish, going by this trend which started forming sometime earlier in the month of January. For stocks, we see in stocks beginning with US 100 from the daily time frame, opened with a gap down or a bearish gap. This is because when there is war intention, money is said to be transferred from stocks to much more safer havens. And what will be the safer haven in this context? Of course, the precious metal gold. Now, I would like us to observe a unique scenario here. Somewhere early last week, we see, in fact, on Monday last week, exactly 7 days ago, once we saw the DeepSeek stock coming into the stock field, we saw it opening with a gap right here to the downside, and then it was later filled. This is the what I meant earlier by saying 48% of the time this is going to be filled. Now scalpers and the traders would want to take advantage of that, and the relevance of saying that is today we see a gap also being created. All right, and overall we know that in stocks we're in a uptrend. That would confirm our buyers to get in for buys until we reach to the next level. For US 500, S&P 500, if you may like, the scenario is the same. Money is being taken out from indices and stocks and being put in safer havens, awaiting the situation to calm down. Would want to see this gap being filled to be in relevance to the uptrend. But as long as we keep on getting this, the threats on imposition of various tariffs, we possibly would see price printed to the downside. On the same scenario, we are likely to see also on US 30. Now, as a disclaimer, it is important to note that I see a question here by Charles. Why did the gold go bullish even after the fundamental analysis showed us? Charles is asking, why do we see gold being bullish although fundamental analysis is showing us that we have a stronger dollar? If that's a good question, Charles. This is because on commodities, it's good to understand that what moves commodities is slightly distinctive from other asset classes. Each asset class has got its own influences for making it to move in a certain direction. Now, in regards to your question, in commodities, when we have tensions in the global markets, which tensions are caused by uncertainties, we see gold being bullish because investors put their money in a much more risk-off asset like gold, which has proven to have been a store of wealth for over 5,000 years. Now, as a disclaimer, this by any chance is not meant for financial advice. It's purely meant for educational purposes. Kindly do your due diligence and remember to observe risk management. See you guys tomorrow, the same place, the same time, to do things the same way. And if this is your first time getting to interact with the financial markets, or is your subsequent time and you'd like to get more and you do not have an account, kindly go get back to your mentor who has allowed you to join this chat box. or also visit hfm.com, attempt to register for an account right here. I'm showing with my cursor, and you'll have our experts spark conversations with you on how to move about the global markets to find various opportunities for possible profits. Until tomorrow, the same place, the same time, take care and God bless.